Hi, this is the Business Guy with Lawyers Limited and Asset Protection Planners, and today we're going to talk about something that hardly anybody talks about and something you really need to know if you're in business, own rental property, invest in the stock market, and you also understand the tremendous wisdom of using LLCs to protect yourself from lawsuits, and that's how to pay yourself from an LLC. What if you have or are thinking about having a single member LLC or multi-member LLC with someone else? How do you get paid so you don't get yourself into trouble and that you take advantage of a tax law that helps you maximize the amount of money that you stick into your pocket? And I need your help. Can you please click the like button below so YouTube will promote this video? I'd really appreciate it. And if you like this information, please join our community by clicking the subscribe button so that when more videos come out like this, you'll get notified. We also have a coupon code for you if you want a free consultation to order a trust or company, but more about that later. So let's jump right in. Okay, what is a single member LLC? It is an LLC, a limited liability company with one owner. The IRS sees it as a disregarded entity for tax purposes, and that means from a tax perspective, the owner and the company are one and the same, kind of like a sole proprietorship type of business. With an LLC, however, you have legal protection. So somebody sues your business and there are provisions in the law so that the lawsuit cannot jump over into your personal life and empty your bank account. Take your real estate, your car, etc. So you go down to the bank with your LLC paperwork and open a bank account in the name of the LLC. You have a checking account in the name of your LLC, you have a bank card. So let's put up some illustrations so you have a visual representation of what we're talking about here. So over here, we're going to have a single member LLC, and on the other side, I'm going to put you. This line down the middle means that you have separated your business liability from your personal assets. So a customer, an employee hurts themselves, or somebody working for you crashes a car while on the job, we completely separate ourselves personally from all of that business liability because now the liability sits inside of this LLC. I mean, if you sell something online and never see the customer, even if you just sell it on eBay or Amazon and your customer hurts themselves with something that you sold them, they could sue you personally without using an LLC to operate your business. I know somebody who did that. They had toys and decorations made in China, and they sell those on these platforms. They always have to worry about product liability. So over here, we have hundreds of thousands of dollars coming in through our single member LLC. We deposit money into our LLC bank account. Then we have the LLC money move over here to your personal bank account. So say you move $10,000 over, you write yourself a check, or just do an online transfer from your LLC bank account to your personal account. I have a question for you. When you move $10,000 from your LLC to yourself, in this situation, does your LLC get a tax deduction? Well, if it was an LLC taxed as a C corporation, where the corporation is taxed separately from you, the answer would be yes. However, this is a single member LLC and its default tax status is a disregarded entity taxed as a sole proprietorship. That means for tax purposes, you and the company are one and the same. Again, not for liability purposes. It still protects you from lawsuits, but for tax purposes, this line between you and your company represents bulletproof glass. The light shines through, that represents the taxes, but the bad things, the bullets, the lawsuits, are stopped inside this box over here called the LLC. Now keep in mind, none of this is tax or legal advice. Check with a CPA for tax advice or attorney for legal matters before you do anything. In fact, we have attorneys on staff who may be able to help. But every CPA I've ever spoken with, in combination with my own knowledge and experience, says for long-term rental real estate, just keep it as a disregarded entity. If two or more owners as a partnership form of taxation for your LLC. Now people set up S corporations or convert their LLCs to S corps to save on the self-employment tax, that is Social Security and Medicare. And there's no Social Security and Medicare on standard rental income anyway, so there's little to no point in changing that business type to an S-corp. In fact, it can even be damaging for passive income type businesses to be taxed as S-corporations. So leave it alone and let the default tax status of sole proprietorship or partnership remain if you have rental property. But if you're going to operate as an active business, such as running a restaurant, flipping property where you buy, fix up, and sell real estate quickly, in healthcare, entertainment, personal trainer, web designer, car repair, etc. So we're talking about active businesses as opposed to passive ones. They say it's better to file extra tax documents so your LLC is taxed as an S corporation. So how do we do this? We use two forms. First, I file an 8832 form and check a box so my LLC is taxed as a C corporation. Then I immediately immediately file a 2553 form so the LLC is taxed as an S corporation. So now instead of your LLC being totally transparent for tax purposes, it's kind of like tinted bulletproof glass. I recommend that you watch our video on LLCs versus S-corps. Now, when your LLC is taxed as an S-corp, you'll most commonly pay yourself in two ways. First, as a salary. The IRS says you need to pay yourself a reasonable salary. That is, if you hired somebody else to do your job, how much would you pay them? On your salary, you pay federal income tax, state income tax, unless you live in one of the 9 states that don't have state income tax. So federal tax, state tax, Social Security at 12.4%, and Medicare at 2.9%. Those last two add up to the 15.3% self-employment tax. Now, the second way you would likely pay yourself is as a distribution to shareholders or distribution to members of your LLC. After you pay a reasonable salary, the rest of the checks you write yourself throughout the year as a distribution is not subject to Social Security and Medicare. So write the word distribution on the memo section of the check and save yourself 15.3% taxes on your distribution. So first pay yourself a reasonable salary because the IRS expects you to pay some money towards Social Security and Medicare. But say you pay yourself $100,000 in distributions throughout the year. Right there, you just save yourself a grand total of $15,300 or 15.3% of that $100,000 distribution because you filed some documents so your LLC is taxed as an S corporation. Pretty good, huh? By the way, if you want to form an LLC, call us or visit our website below for a free consultation. Use coupon code BG for Business Guy, BG25 for $25 off an LLC or BG100 for $100 off an asset protection trust. And again, you wouldn't do this if it just owns rentals because there's no self-employment tax due on rental income anyway, and S-corporation taxation is not favorable if you just have a bunch of passive income such as rent or stock market investments. So let's say you're an Uber driver, you sell things online, an LLC tax as an S-corporation might be a great idea. So let's do the math and compare yourself with your LLC that is taxed as an S-corporation. Now on the personal side, you have this $100,000, you pay it to yourself in your active business. And after taxes, and if you're like me, you're in the highest tax bracket, that's 37%, or if it goes the way some politicians want to see it, 39.6%. So 37% is $37,000 in federal income taxes. But let's do the math for illustration purposes over my shoulder here with these numbers. Let's say you're in the 24% bracket. That's $24,000 in taxes. So that $100,000 minus the $24,000 equals $76,000. So on the personal side and the LLC tax as an S-corp side, those numbers are going to be the same. So in California, let's say 9.3%. So that's another $9,300 in taxes. So that reduces your take-home pay to $66,700 after federal and state income tax. So that's how much you take home on that $100,000 if you have an LLC taxed as an S corporation. Without the LLC, you also have Social Security at 12.4%. Since you own the business, you pay both the business side and the personal side of that. So that's $12,400 in taxes, plus Medicare at 2.9%. So that's $2,900 in taxes. So $66,700 is only $51,400. So your $100,000 goes down to $66,700 with an LLC tax as an S corporation and down to only $51,400 without the LLC, putting the extra $15,300 in your pocket because you were wise enough to call us on the phone and have us set up an LLC and have your CPA file as an S-corp. Plus, with an LLC, you also have lawsuit protection. You're also less scrutinized when trying to write off things like computers and business vehicles because by having an LLC, after all, it's a business and you're expected to have expenses. But the great thing is with S-corporation taxation, if you really want to, you really only have to pay yourself a salary one time a year. Just pay yourself a reasonable salary in one chunk, let's say at the end of the year, and if you are the only employee, just do payroll one time. The rest of the time, you just make distributions to yourself and just have to be sure to pay your quarterly income tax installments. So just write a check from your LLC checking account and pay yourself a distribution, let's say on the 15th and 30th of every month, or as often as you want for that matter. But if you have a steady income, paying yourself on a regular basis might make it easier so it coincides with your monthly expenses. So you can see how an LLC tax as an S corporation can put a lot more money in your pocket every year if you're running an active business through your LLC. Feel free to comment below, join our community, and subscribe so you can see more videos like this. Please click like so YouTube promotes it. Thanks for watching. This is The Business Guy.